Welcome to my channel. I'm Doris and I'm here to share with you about my stock account and today's market update. Today my stock account earned a total of $753. The US stocks were mixed. The Nasdaq and S&P 500 fell for 2 straight days. In more than 30 years of the hottest inflation, the RBA bucked the trend to raise interest rates. Let's first take a look at my account. Today, my account, including the aftermarket, is earned $440. Currently earning $440. That's a gain of 0.55%. But in total, I lost a total of $21,075. So right now, the net asset of my account is $80,000. Today, SQQQ earned $0.29 or 0.69% to $42.42. The RV lost $0.09 or 0.21% to $43.52 before the market closed. In the post-market, it rose for 0.53%. Today's market fluctuated slightly among all the industries. Dow Jones Industrial Average rose for 0.03%. Nasdaq Composite lost for 0.18%, and S&P 500 lost for 0.02%. Today, internet content and information lost for 2.21%. U.S. stocks closed mixed on Wednesday, with the Dow Jones barely posting a 4th straight gain, with both the Nasdaq and the S&P 500 falling for a 2nd straight day. Traders carefully reviewed the latest results to gauge the impact of rate hike on corporate profits. Jpmorgan Chase said it was bearish on U.S. stocks. Investors welcomed a new batch of earnings results on Wednesday. Tech giant Microsoft beat analyst expectations for earnings per share in its fiscal second quarter, but the company gave its earnings call guidance lackluster. 50 Park Investment CEO Adam Slaran said, if even companies are bearish on their future, why should investors be bullish? That's pretty much what we got from the earnings quarter. Investors are preparing for more important earnings as recession fear hangs the market. So far, more than 70 S&P 500 companies have reported fourth quarter results, with 65% being stronger than expected, according to Refinitiv. LPL Financial Chief Global Strategist Quincy Crosby said, as most of the results are still yet to be announced, the question of whether the recent rebound indicates a shift to growth can be answered by beating expectations and solid performance guidance. Tesla and IBM report earnings on Wednesday. Societe Generale strategist Kenneth Brooks said, investors are now waiting for the latest results from companies like Tesla and IBM. The leak corporate outlook, a looming recession in the United States, and fears of an escalating conflict between Russia and Ukraine has all prompted the retreat. There is no doubt a concern about slowing corporate earnings growth, especially in tech stocks, so there is a sense of hope to continue selling tech stocks and the dollar. But if the conflict between Russia and Ukraine escalates and Europe gets involved, what will happen in Ukraine now? It is a huge tail risk. U.S. stocks closed higher on Tuesday, with the Dow recording a 3rd straight session of gains. As of Tuesday's close this week, all 3 major U.S. stocks indexes rose more than 1%. Despite the overall positive trend in U.S. stocks so far this year, big Wall Street analysts remain not optimistic about the future. Jpmorgan Marco Kolanovic, chief market strategist and joint head of global research, said Tuesday that he was pessimistic about the rally earlier this year and was already preparing for a possible sharp correction in the future. So far this year, the tech-heavy Nasdaq Composite Index has gained more than 8%, and the S&P 500 is nearly 5%. but he still expects a correction of more than 10% in the first half of the year. He said he was completely bearish on the U.S. stock market. The fundamentals of U.S. stocks are deteriorating, yet the market has been rising, so the conflict must happen at some point in time. Last week, it downgraded U.S. stocks on Jpmorgan to holdings and recommended treasuries and cash as viable safe haven assets. He also warned that in a recent report that his underlying assumption for the U.S. economic outlook is a hard landing, but that U.S. stocks have yet to reflect signs of recession. He said, U.S. short-term interest rates have moved a lot over the past 6 months, and they maybe go up a little higher and remain at this higher level. American consumers are already carrying lots of debts. Although interest rates have already risen and consumption remains resilient, it somehow fits our argument last year, where consumer spending will be less resilient over time. Kolanovic, citing a number of recent key economic data, such as ISM service data, retail sales data, and the Federal Reserve Bank of Philadelphia survey, which is why he turned bearish. He believes that economic conditions in the U.S. economy will continue to deteriorate. While inflation has slowed in most advanced economies, Australian inflation has bucked the trend. In the last 3 months of 2022, overall Australian inflation accelerated to its highest level in 32 years, above consensus expectations and rising investors' expectations of a rate rising at RBA meeting next month. On Wednesday, January 25th, the Australian Bureau of Statistics showed its CPI rose 7.8% in the fourth quarter from a year earlier, above market expectations of 7.6% but below the RBA's forecast of 8%. It was the highest level since June 1990, while the Reserve Bank of Australia heavily tightened monetary policy, sending the economy into a deep recession. The Australian Bureau of Statistics said the main contribution to the CPI growth in the fourth quarter came from domestic holiday travel and accommodation, electricity, and new home purchases. This is the chart of the CPI of Australia. We can see that since December 20 from last year, it rose significantly to almost 8%. Core inflation, another indicator favored by RBI, rose to 6.9% in the previous quarter from a year earlier, above market forecast of 6.5%. This index is the highest level since statistics began in 2003. Data showed inflation remained high despite the RBA's aggressive tightening of monetary policy and raising its benchmark interest rate to 3.1% from a record low of 0.1% in May last year. The RBA has previously said it will take everything necessary to bring inflation back to its 2 to 3% target. Markets expect the RBA to raise rates twice by 25 basis points this year, allowing the rate cycle to peak at 3.6%. The market expects a more than 90% chance of a 25 basis point RBA rate hike in February. In addition, data from Australian Bureau of Statistics showed that the services CPI was the biggest year-on-year increase since 2008. Foreign trade products prices rose 8.7% year-on-year, and domestic goods and services such as utilities and rent rose 7.4%. Globally, inflation is slowing in most economies, and investors expect the current rate hike cycle to come to a close. Markets expect the next Fed rate hike to fall further to 25 basis points. On Wednesday, the Bank of Canada raised interest rates by 25 basis points in line with market expectations and announced it would suspend them. This month, countries such as Norway and Malaysia left interest rates unchanged, while Indonesia hit a pause. Angola, Africa's third largest oil producer, announced last week that its policy committee has cut its policy rate from 19.5% to 18%. by 150 basis points, this country's biggest cut since July 2018. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.